Thank you for staying tuned. A new report from Ernst and Young estimates that 17 out of 24 banks may not meet the capital requirement from the CBN if it is increased 15-fold from its current 25 billion naira. The report also discusses the options available to banks that may fall outside the CBN capital requirement. Although the reports acknowledge that financial soundness indicators show that Nigerian banks are largely safe and resilient as of 2023. It also said the recent plan by the CBN to increase the capital base of banks will lead to a series of measures and acquisitions as witnessed during the last recapitalization exercise in 2004 and 2005. The report noted that the plan to recapitalize banks is premised upon the recent devaluation of the Naira in 2023. And to unpack these, I'm joined live on the news by Okpo Taiwo, an economist analyst and also executive director, Africa Bridge Initiative. Good afternoon. Glad to have you join me.
Good afternoon. Nice being here today.
Now, reports mentions that banks have the option of merging or acquiring other banks just to meet up with the capital requirements of the CBN. What potential risks are we looking at when it comes to measures and acquisition, in the banking sector?
The banking sector in Nigeria, looking at the background, as at 2023, as at 2003, 2004, we are what we call the tsunami, so to say. Like the banker said there, some of us were part of the system then, where as a banker, we have some of the mergers that occur as at then. What's the reason? The CBN raised the capital base, talking about 25 billion. Now, when we talk about raising the capital base of a bank, we are looking at the liquidity of those banks. How viable is the bank? Two things are involved. Number one, when a bank is being licensed by the CBN, there's a certain amount that are expected to deposit with CBN, not part of your running cost. So, for instance, if you're having 100 billion as a bank, that 100 billion, 25 billion is meant for CBN. And out of the remaining 75 billion, there's a percentage you have to deposit with the NDIC, talking about the insurance of your depositors. So we are left to nothing less than 45 billion. Now, when we talk about 45 billion, what do we do with 45 billion as a bank in Nigeria? And as at then, we should also look at the GDP of Nigeria and also the foreign exchange, talking about the dollar economy. As at then, we're talking about 25 billion. As at then, our current exchange then was talking about, let's say, 200, 300 per dollar. But today, we're having 1,400 to a dollar. So you can see that figure has reduced drastically as a result of inflation and foreign exchange in the system. So, and the CBN, as of today, CBN is targeting a $1 trillion as a GDP for Nigeria. And the major driver of such a GDP is the commercial banks. So if the commercial banks are not liquid enough to solidify the economy, then the CBN have nothing to do in the economy. And that is why the CBN might need, as a matter of urgency, to do what? To increase the capital base of the commercial bank. So 25 billion capital base is no more realistic, because as at then, we're talking about $188 million in terms of the exchange rate. But today, that $188 million has reduced drastically to $18 million. So what is $18 million to an average bank in Nigeria, or to an average economy in the global economy? Okay, so the figure has to increase.
Just to quickly chip in there, if you recall the last recapitalization exercise in 2004, where the banks were reduced from 89 to 24. And now looking at this same exercise about to commence, what would likely be the impact of these on the economy as well as employment in Nigeria?
That's a very good question for Nigeria. One part on the SME, another part on the customers, another part on the employee of the company. Now, when we talk about the mergers and acquisition and the recapitalization, we talk about number one, we talk about upscaling the market share of such a bank. That means if two banks are coming together, that means maybe one is having 75 billion, another one is having 75 billion, they're coming together. So their market share is what? Is robust. So they're having more solid stand as a bank. But on the part of the employee, retrenchment is not avoidable. You can't avoid that. there will be a lot of cutting down in terms of cost, cutting down the staff strength. Because if I'm taking over your asset and your liability, for an average Nigerian institution, employees should not be part of the liability that should be taken over, because that kind of liability is a long-term liability, and that means profitability is not sure for such a bank. So the employee, as of today, understand that you have to upscale your skill, both nationally and globally, for you to understand that the job might not be there sooner than never.
But the report mentions that there seems to be resilience by Nigerian banks, largely saved, to a good extent. That's for the year 2023. Is there a risk these may change if capital requirements are increased and banks struggle to meet them?
I read that report by Ernst and Young, and when we talk about banks being safe, that's a generic term. For Nigeria, being safe is not, there's nothing like being safe. Anything is possible in Nigeria. The economy is volatile as of today. So if a bank is safe as of December, by January, the bank might not be safe anymore. We've seen such instances in more than 2 decades in the past. So being safe for a commercial bank in Nigeria is that word is a generic term, and is not sustainable for an average bank in Nigeria. What is the liquidity of each bank? For an average bank, whenever there's a recapitalization, the first thing that we are looking at, what is the market share of individual banks? What is their figure in the Nigerian stock market? What are they selling? What is their figure? Is it 10 naira? Is it 20 kobo on the floor of the Nigerian stock exchange? So those are some of the indices you look at. So it's not just having what we call a balance sheet of about 500 billion for a bank. That's not sustainable, because those funds, that balance sheet does not belong to the bank. It belongs to the clients, the customers. So being safe is a generic word. How liquid, how solid is those banks in terms of their capital base, in terms of their insurance base, in terms of their credit base? Because if we're having about, let's say, 75% of your balance sheet out in terms of loan, so how do you prop up your financial capacity? That means, as of today, the recapitalization is unavoidable. We need to upscale our financial sector.
I know you talked about retrenchments when it comes to recapitalization being inevitable, but then talk me through some of the potential risks of this CBN planned recapitalization exercise.
The recapitalization exercise, like we witnessed the last more than a decade now, we saw then there are a lot of costs that will be included in this process. Number one, there will be a lot of legal costs that will be included, because the legal aspect in terms of, how do I get in your database? And so there's going to be a lot of security challenge also. There's going to be a lot of unforeseen costs. A lot of costs to be associated with all of this. And that is why we understand that insurance is very critical in this particular process. So because the unforeseen costs will be in terms of data, in terms of security, and talking about 21st century, those costs we'll also be talking about in terms of the IT. What is the IT security of a bank A? What is the IT security database of bank B? And merging it together, how seamless is going to be in that process? The staff will suffer for it. The client will also pay some price, because there will be downturn in terms of a network for the customer of those banks. So more than some time in terms of, so a lot of customers will relax a bit in terms of putting their form, because they don't know where the recapitalization is going. Is Bank A going to acquire Bank B, or is Bank B going to acquire Bank A? And if the one that is going to acquire Bank A, the name is going to change. So you can see that even the branding will change. And if I'm not comfortable with that brand, what will happen? My billions of dollars or billions of naira in a bank A, I'll pull it out and hold on my phone and wait until the whole process is complete. So you can see there's going to be a lot of challenge in that aspect. But I believe with insurance on the part of those commercial banks, is something they will skate through days to come.
Finally, one question for you, Mr. Akpolo Ataiwo. There's been criticisms as to this directive by the CBN governor, Olayemi Kadoso, as to raising of the $1 trillion dollar, for the federal government to help, salvage the economy. People say, or critics say, this isn't the best of times for such directive. What do you say about that?
The CBN governor, Mr. Kadoso, he is not in charge of, he is not the owner of CBN. CBN belongs to Nigeria, and it belongs to the Nigerian government. This process has been long overdue. So having that sentiment is not It's not a solid economic statement from the Nigerians talking about that we shouldn't be having that conversation. It's long overdue. That conversation is long overdue. As of today, the entire GDP of Africa is not equal to 4 multinational companies in the United States of America. I mean the entire GDP of Africa. What does that show to us? That means we are not part of the first 10 in the global economy. So if CBN is talking about a $1 trillion economy, well, it's like we're just starting. So nobody should put a negative sentiment on that part. We should be talking about even $10 trillion as an economy, because we are the giants of Africa. And being a giant of a continent, it's not about politics. It's all about governance. It's all about economy. It's all about sustainability. And if your GDP cannot be beyond $1 trillion, so what are you doing in the global economy? And with that, we know that Nigeria must go up, upscale in terms of our financial capacity in the global economy.
Well, thank you so much for your expertise on the news. Okpaoluwa Taiwo, economic analyst, as well as the executive director, Africa Bridge Initiative. Thank you for your kind company.
Yeah, good to be here today.